Hello everyone, and welcome to the latest in our series of INFUSE webinars looking at the world of underwriting, hosted by Send. Our subject today is going to be cyber underwriting, and what's next is the question. To debate that question, we've got a panel of cyber insurance experts who are going to be joining me to talk through where we are today in terms of the cyber insurance market, some of the emerging threats that are coming through, we're starting to see, some innovative solutions which are being brought to market to meet some of those threats, and some of the future trends that we're seeing appearing on the horizon, which everybody's going to have to think about over the next few years. So to debate that subject, I've got three people in my panel today. Tammy Kocher, who's Vice President and Head of Cyber Underwriting at MSI, who's joining us from the US. Ed Ventham is co-founder and director of Assured Cyber Limited, and Helen Rios, who's underwriting director of Kai Syndicates. Tammy, you've joined me on stage. Welcome. Would you like to introduce yourself?
Yes. Thank you for the intro. I'll give you a short snapshot of my 2 decades in cyber underwriting, from traditional carrier to my current role, creating coverage and policy forms from the ground up to implementing new programs. And I'm relentlessly curious in AI, bringing traditional underwriting leadership and incorporating innovation. Happy to be here.
Well, thanks very much for joining us. Ed, you're next up.
Hello. Yeah, hi, I'm Ed. I'm the co-founder and director of Assured Cyber. We're a cyber-specific insurance brokerage based in the UK. I've got 11 years experience in the cyber insurance market. Really pleased to be here.
Thanks for joining us. And last but not least, we have Helen.
Thanks, Tony. Hi, everyone. I'm Helen Rios. I'm the underwriting director at Kai Syndicate. I look after all of the liability classes, including cyber. I've been in underwriting in the cyber industry for almost 10 years now. And prior to that, I've got a background in modelling and exposure management.
Excellent. Well, look, thank you very much for joining me up here on stage, and for our audience for joining us today for the webinar. I'm going to start at just a very simple, high-level question. Where are we? What is the status of the cyber market today? In terms of performance, in terms of capacity, the dynamics of what's happening in the market. Give us a flavour of where we are today. Helen, maybe I could start with you on that.
Yeah, sure. I think it's been a really interesting year for the market. After 2 years of hard market conditions through 2021, 2022, we saw the market shift last year with increased capacity in both the domestic markets and the Lloyd's market. And this competitive market space then continues into 2024. We've seen increased capital, both on a direct underwriting side, but also kind of come through on the reinsurance side and even into the capital markets. And I think it's a real kind of sight that the market is now kind of starting to mature. We've gone through kind of cycles of development. We've gone through soft market, hard market, and now kind of starting to soften again. But actually, the commitment from the capital coming in is a real kind of show of strength into the cyber market. Alongside this, we also see the risk landscape continue to evolve, reflective of kind of ever reliance on technologies. And those technology advancements are evolving constantly too. And then alongside that, we've got legislation that's trying to keep up. And that's not to mention things like the events that have happened. So Change Healthcare, CrowdStrike, CDK. There are loads of different variables that are going on in the market that kind of real put a challenge against the capacity, the rates that we're seeing, and that the kind of inconsistency, the volatility of the market conditions and that risk landscape.
Okay. Tammy, Ed, what do you think?
I can add on to that I'm quantifying my view based on large account, because I do Fortune 500 type business, but I'm seeing similar with rates and capacity and reinsurance being 85% of the reinsurances in top 10 carriers. So that being said, what I'm seeing is instead of everybody going deep and and going wide from writing everything, I'm predicting we will continue to see and start to see carriers having specialties and going deep in a class to augment what the AI does and all their history, instead of trying to be generalist and try to be the best in class in 50 classes. I see that as an area of strength, and I see that a trend that's happening currently.
Okay. And Ed, from your perspective, how do you see the market right now?
It's a buyer's market. I think if you are buying cyber insurance, this is a really good time to get it. We are seeing more and more capacity come in, as both Helen and Tammy have said. It's a really exciting time where insurers and brokers actually are investing a lot into the services and tools outside of the policy itself. So cyber insurance is probably being seen as one of the most dynamic and exciting insurance coverages that you can get. Which is great to hear the word exciting and insurance in the same sentence. So it's a really exciting time if you're a customer, because I know there's been a reduced capacity in the last, say, 4 or 5 years, and I think we're back to a really explosive stage of growth for everybody, which is good.
So why is that happening?
Why is that happening from the growth stage
point of view? Is why is more capacity coming into the market?
I mean, for me, the main reason that we're able to do this is probably the depth or the granularity that we have of the data. I think cyber definitely has the advantage of being. It's not really new. It's been longer than 2 decades, 3 decades, really. But we've managed to collect enough data to be comfortable with the risk exposure. I'm obviously speaking from a broker here, so I'm going to be saying that. I'll be keen to get the underwriters here.
Yeah, I could definitely add to that. So I think whilst we've got kind of a bit more kind of track record, a bit more kind of length of time to be able to understand more around how the market develops, I think what we've really seen, and we really saw the change probably around 2019 into 2020, was the quality of the submission changed out of sight. We went through a period of getting kind of half completed proposal forms that would be sent through and asking for quotes off those to that just not being acceptable. And so the brokers understanding more about what the underwriter needs, the underwriters having more depth in their knowledge of how the kind of technologies are changing, means that the level of information, the consistency of that information that's coming through on an underwriting basis is significantly different to where we were certainly kind of 4 or 5 years ago. And so there grows a kind of increasing level of confidence in how we're able to manage that portfolio of business. And I think that's where you'll start to see the increased capital coming in. And that's why you're starting to see it come through actually in the capital markets as well.
The market is maturing and people feel more comfortable with that.
Absolutely, yeah.
And Tammy, you seeing the same thing in the US?
I am. Helen hit a point that I want to articulate, is not only the quality of the submission, but also what we held everybody to a higher standard, and each time the risk got better and better. So I'm seeing insurtechs that we never had before. We're seeing collaboration between vendor partners, carriers, reinsurers, where they used to be siloed, and more people are interested. Also the trajectory of this product and this exposure, there's a huge amount of excitement around where it's headed. A lot of the other lines that have been around a long time, there isn't that excitement. We know how much it's growing and the exposures keep growing. So people that haven't gotten in are getting in, and people that are already in have to keep up with new entrants.
Okay, so it's very much a dynamic market. Okay, so let me turn now to emerging threats. In particular, how the speed of AI evolution is impacting risks. Tell me what you think about that and what's happening in that area.
Yes, it's a dual lens for me, because not only are we using it in our day-to-day to take tasks off our plate, to synthesize data more effectively, but also have to look at it through a privacy lens of what regulatory exposures do we have from our clients that are using it, and what guardrails do they have in place for their employees. That's a whole new conversation. I've never seen, now we've got CAIOs in the C-suite and they're responsible for AI. That's a new evolution. We're going to continue to see that. Sophisticated phishing as a result of AI, the voice cloning, in addition to some of the biometric spoofs. So as much as it is helpful when it's detecting things, it's taking things off SOX plates and automating a lot of that, we have to be careful to not forget the regulatory and the privacy implications as well.
Okay.
I completely agree. I think the real challenge, there's such a huge opportunity of use of AI, both to benefit the client, to be able to identify when either the client is at risk or they are under attack. So there's an opportunity there. There's also opportunities in how we use AI to augment underwriting. But the real challenge is creating that framework that sits around that to make sure that you are still compliant, and the level of expertise that's available around AI is probably limited. So these people are in such high demand to be able to not just use that tooling, but to use it in a really kind of constructive, safe way. And I think that that's one of the future challenges that inevitably the cyber market will face, because it sits within that realm. So the more guidance we can give to our clients around that, the better. And the more legislation starts to evolve, I think the better as well, right? Once we start to get a bit of case law around this, maybe it starts to shape what we need for both underwriting purposes, but also the steer to clients on that too.
It sounds
Okay, so just turning to what Ed said later on. Ed, I'll come to you in a second, if I may, about making insurance interesting. If you've got people with good AI skills and you ask them to come to an industry like insurance, which does not have a great reputation out in the world, that's going to create problems for us, isn't it? If we need those skills and we don't have them because people don't consider AI insurance to be an exciting place to take their newfound skills.
So you think the talent, you mean like the skills gap within it,
Absolutely,
within insurance?
Yeah. I mean, we have it generally, but in AI, I would have thought a really big issue.
Yeah, that is definitely a risk. I've yet to see AI really be used to its full extent. I think we're probably, I'm just going to throw a number out there. I think we're about a decade away from AI being like a real, genuine threat in terms of businesses not being able to counter an attack against it. I'm not talking about AI being used to automate phishing campaigns and stuff like that. That's existing right now.
Yeah.
But I think from the skills gap, you're right. There's obviously potentially a lack of understanding, not just within our sector, but with all sectors. But I think that's what we, as an industry, do best. We have to innovate once the claims have happened, and fortunately, we're proving that we can innovate fast enough because the data we're collecting, we are getting fast enough. So that's what I'd hang my hat on, hoping that's the way that we go.
Okay, so we're. I mean, it's the very nature of the business that you're constantly playing catch up with whatever is happening out in the marketplace. But I guess as an industry, we've got to move faster than maybe we've historically felt was the right speed to move at. Okay, well, let me. We've explored some of the emerging threats. So what about the solutions that we're seeing through an innovation lens at the moment? What are the latest risk management strategies, what tools are available to tap into sort of the vast volume of data and provide greater value to policyholders along the way? Ed, what are your thoughts on the solutions out there?
The solutions, I'd say there's probably two types that you could talk about. There's the solutions that you have that insurers are offering and brokers to their clients. So there's been a massive move towards pre-breach services, for example. So offering scanning solutions, tabletop exercises, crisis simulation, security tools that are going to enhance the infrastructure of the clients, of the policyholders. That in turn is giving us richer data on their estates. So that's one way in which a lot of investment has gone into, and I think we're starting to see like a positive outcome from that. The other side is the tools that we're using as an industry to avoid claims for our customers, which you could also argue is the pre-breach side, but also how we can better understand the nature or the demographic of the clients that we have. We're obviously talking a lot about artificial intelligence in this webinar right now. So I mean, keen to get both Tammy and Helen your thoughts on this, but the large language models that we're all familiar with, the chat GPTs, for example, I don't think they're properly really helping us unless you could say, you know, I typed in this morning a question, what is the answer to this? And it does give it to you. That's not mass helping. I think the sort of the small language models where you're basically training a bot to understand subsets of data. That's where we're going to see a massive uptake over the next, I mean, people are using it now, but I think it's going to become more and more powerful. Insurance has a ton of subsets on data. That's what we collect. We collect granular information on MFA for certain types of industry being used, certain security tools being used. So I think that's something that is being used and will be continually will continually spin up as we go forwards, which is really, really exciting.
Yeah, can I, am I okay just to jump in to add a bit to that? Because that really kind of ties in with the approach that we're taking at Key, where really the majority of the underwriting is being done using an algorithm. But the algorithm needs data to be structured in order to kind of ingest that and give an output. And the real challenge that we have within the insurance industry in general is that there's vast amounts of data out there. It's just that it's not in a structured, usable manner. So actually we can use some of this tooling to create more structured data, and that data will then feed into systems that helps augment our view of risk. Ed spoke a little bit about use of large language models. So at Key, we've actually got a team who focus specifically on use cases for large language models, and we've had some real successes. And I think, you know, we kind of spoke a little bit about there being a kind of skills gap, and I really do think actually there is a skills gap within the insurance industry, and there's a bit of a reluctance to embrace some of these technologies. And I think that that's one thing that I'd really push across to kind of listeners here, that you have to learn, we have to move forward with this, because otherwise we get left behind. It's essential that we learn the benefits of some of these tools, but as we mentioned previously, understand the risk to them as well. So make sure that we're using large language models in a very controlled framework, because otherwise you're not going to get the output that you need. So you need to have a certain level of confidence that can also be kind of automated too, right? You can get a level of confidence score out of a large language model. So what's that threshold that you're comfortable with? Again, it just comes down to the kind of framework that that you need to put around the use of the tools.
Yeah, I guess the cyber criminals who are creating those claims are certainly going to be doing all this kind of stuff themselves. Tammy, your thoughts?
Yeah, I wanted to add to that is I've been seeing, you probably have too, just at conferences and any of the other speaking events I've had, is that we're no longer siloed. You've got data scientists speaking with insurance professionals, speaking with brokers, and we're all using AI in a different way, but ultimately with the same goal in mind, enhancing customer experience. To Helen's point, taking unstructured data that we've had and repositories, as Ed had said, and making that meaningful. And as we learn and skill up, I think as much as we have a skill gap, it's going to bring new talent into our decreasing pipeline of underwriting talent as people start to retire and things. And it's going to bring that excitement to say, wow, it's not people's normal view of insurance that it's not tech enough for them, right? So while you have a little bit of a skill gap, I think once we catch up to that, we might get talent that's wider than our traditional underwriting trajectory.
Tony, can I flag something with this? Because I agree, like there is a gap in the knowledge on the tech side here, but the danger is that we move too far over to that side and we lose sight of the commercial side of insurance. And this is what's so important. And this is the whole model of broking and underwriting together, because there is always a risk, and no matter what the data tells you, the data will give you the exactly what it will show you, but it won't tell you like the people behind those controls. It won't tell you like the emotional decision that's gone into a customer's procurement journey, how they've like got all of the different security products together. And that's so important when you're actually evaluating what a risk is. And I think that's something that cannot be lost, because that's the art of insurance.
I think that's a really important point to make, because when you're starting to look at a very technical line of business like cyber, it is easy to go too far into the we've got loads of data, and what does the data say? Just follow that. Yes, that's important, but the underwriting, it's always a balance of art and science. Historically, maybe underwriters have considered it to be more of an art than a science. I think it's becoming more of a science, but there's still always got to be that balance between the two, hasn't there?
I think actually, if you kind of compare it to one of the other classes of business, so if you look at property, in property, you actually have very sophisticated models that are now running on data sets that are kind of 40, 50 years old. But it's always essential that that modeled output is taken as that, right? That it's an individual view of risk. The underwriter can use it then within their broader skill set to align with the knowledge that they would add to that. So you're not ever using a single data set in silo. You're not ever relying entirely on data sets, because there are gaps in data, and like you say, Ad, there are things that the data just doesn't capture. And so keeping that human underwriter perspective, it is critical. And I can say that even at Key, where things are being written using an algorithm, we are still bringing in the underwriter perspective. We are still validating all of those models and all of the decisions that the algorithm makes using human underwriters and underwriting experience, because that piece cannot be replaced, nor do we want it to be replaced.
I think that's music to the ears of the underwriters who are in our audience today. Well, look, we've looked at emerging threats and the innovative solutions that are out there to address changing risks. What do we see is going to happen into the future? What are the future trends, and what's next in cyber products, and certainly in data-driven risk assessment? Who wants to look into their crystal ball and tell us what the future holds? I'll throw it open to all of you to give some thoughts on that.
Well, I know where a lot of the insurers, cyber insurers, would like to move, and I'm not putting words into your mouth here, Helen, certainly, but I feel like, or maybe you could challenge me on this. I feel like insurers want to get a better picture of clients, and so I know there's a lot of investment that are going into tools like basically finding APIs that you can plug into the software the environment that your clients have, and ultimately having like that live feedback from their policyholders. In theory, it sounds incredible. It's just the difficulty is actually getting the customers to buy into that. It's quite a big move to say, I'm going to open up my doors to the insurer. Security and insurance is still managed separately in a lot of budgets and a lot of teams, but I think that's where a lot of investment is going to go over the next 4 or 5 years.
So security doesn't see insurance as part of the security solution. They still see it as being something behind, which is a backstage, something that you fall back onto if the whole security thing fails. Is that the mentality?
Well, I'm talking from the client side.
Yeah.
I'd say 90% of the time, insurance is coming out of the financial budget, not the security budget, or it would be vice versa. But it's always one team which is signing off is not actually the team which is probably most relevant to.
Right.
So that's the kind of misalignment there.
Okay, so better alignment in that area. Okay, any other thoughts?
It definitely would work ideally for Key if we were able to get that live feed from clients, but I agree that we are pretty long way away from that, and getting them comfortable with kind of constant monitoring. And actually, the cost impact of doing that is huge. It is something that we've looked at, and we know that there are significant implications from a costing basis to kind of keep those feeds running live, and also like what do you do with them? Like how do you inform your decision making? What I feel is that yes, the more data you can get in, hopefully the more consistent your underwriters can be. And I think that piece is really critical. And all of the kind of the work that we've been doing to assess this piece, if you can reduce the volatility in your portfolio, then you have a kind of better standing long-term portfolio in general. And the way to do that is to create increased consistency in underwriting. And I think the data does help with that. As I say, it can't be the only offering. My feeling, and kind of where the market continues to move to, is that we see kind of wordings constantly updating, constantly evolving. Can we add different elements in? Can we create something bespoke? One of the exciting things that I've seen in the market is an increased submission around parametric deals. And I think that's really telling of the sophistication of the market, of the sophistication of the tool sets that sit around the market. I think it's a really positive sign for us. And it also allows us to address kind of bespoke requirements for the client in kind of a really evolved way for the market. So I think that that's a really interesting piece that we can see moving forwards.
Okay. And Tammy.
I'm just going to add to that is that even though I'm obviously very into AI and all the pluses of it, I also told people, let's not forget pixel and technology exposure and all the things that aren't necessarily automated, but they were always underwriting concerns before. And I feel like my only concern with all the evolution is we're so focused on AI that we're going to forget what got us here, but also some of the things that we have to continue to monitor going forward. And those aren't going away. And in the large account space, I can say it's harder, and you can offload some of it to AI, but in terms of API feeds and stuff, I see that more in the SME space. But I think through a different lens, depending on your target market, what carriers, who they want to be and who they want to serve, there's a different lens for everybody and how they adapt to that.
Okay, it sounds like we've got an interesting future waiting for us. Well, look, we're rapidly moving to the end of our 30 minutes. What I would like to do is just to, for our audience's purposes, just ask you all to think about if you met somebody who was watching this webinar in a couple of weeks' time and they said that they'd seen it here, and you asked them, what do you remember about what we were talking about? What would be the one big thing that you would want them to take away about our discussions today that they could utilize in their daily work, or think, change their thinking about the cyber market? Tammy, maybe I could start with you on that.
Sure. My closing remark would just be trust but verify. I always go back to that, is we need AI, but we're always going to need us to verify, validate, and tell the story. Even though the facts might be automated, we're going to be the best to tell that story, and that hasn't changed. So continue to speak to your teams that this is not going to replace the jobs. It's going to evolve the jobs, learn it, get skilled at it, and have a place to be able to tell the whole story alongside AI.
Yeah, I mean, I think that's a very, very wise point. We are in the insurance industry. Yeah, tech is a tool that you can use. And I always, through my 35 years or so in insurance technology, tried to remind everybody that technology is just a tool, and it's a tool to serve the industry. So your point is very well made. Helen, your thoughts?
Yeah, I really like that kind of summary of verify, validate. I think that's actually kind of is a fundamental part of underwriting. I think that my takeaway would be look for other data sources than what's the kind of traditional elements for underwriting. Don't just use what's been provided in a submission or even in the kind of the standard models that are available in the market. Look beyond that, think about public data, think about the private data that you can use to augment the underwriting information, but still giving that consistent view of risk, and like Tammy had said, like validate that piece as well.
Okay, thanks, Helen. And Ed, last word with you.
Yeah, nice. I mean, it both those points is all about. I liked it as well. Trust but verify. It's a really good phrase, Tammy. My point would just be, don't focus too hard on the customer side. It's definitely, I think the focus should be on collecting better data, or utilizing the data we already have, because we have it in abundance within insurance. So focus on the in-house rather than what more can we get from clients.
Fantastic. Well, look, thank you very much indeed to all of you for your time today. I think we've covered a lot of ground over a very short period of time, and hopefully that's been really interesting for our audience. And I'd like to thank the audience for being here and listening to what we have to say today. I just remind you to register for next month's webinar, which is going to be on the 13th of November. And the subject next month is going to be inflation and interest rate volatility. I look forward to seeing you next month. And finally, thank you very much, and goodbye, everybody.